You are looking live at the Russell 2000 index, and you can see it's not a good time here from 2000 to where it closed today's 1,647. You could go back a long time and just, kind of say this has been trading sideways since really 2018 when we had the temper tantrum here. The taper tantrum when Powell raised rates. Then we got the Christmas, day before Christmas, okey doke, and then it rallied back up, went sideways until the COVID low, boom, and then rallied like everything else with the confluence of, quantitative easing, lower rate, and government stimulus. The whole market went berserk. But really, once that thing burned out, this thing has gone sideways. And if I go to the monthly, you can see this has just been 6 years of nothingness on the Russell. I mean, you could say it really wanted to go down here in 2018 until, the government intervened, and then, Powell, and then of course the Wuhan flu or whatever, the COVID, and the government stimulus sparked it. But really, left to its own resources, this thing has gone really nowhere and continues to trend lower. This is clearly in a downtrend. What's the clue? Well, all the moving averages are trading lower. The short-term 10, 21, 50, and even the 200 longer-term trend is down. So doesn't look good for the Russell. And, today was, and all got to be play by the rules. And this is the first day of an attempted rally. So we're going to watch the Russell and see if maybe it can do something here. The S&P 500 below the 200, nothing good happens below the 200. Sorry, today is day one of an attempted rally. It did, it didn't take out the low from last week, and it made a higher high from Friday's candle, but that's a little solace here. That thing has a lot of work to do. The strongest of the indexes is the Nasdaq, and this one closed right at its 200. If you just, take a step back here and just look at your correction here, we've got 3 legs down now. Maybe this is the last leg. Maybe it made a bottom. Now this is day 2 of an attempted rally. Maybe we have a legitimate rally back through the moving averages, but it has a lot of work to do. And I just wanted to, zoom in here and just see that it did close, near the upper range of the session, and but right at the 200. So there it is, right at the 200, 4.9% below that red line, which is the 50, and 2.6% below the magenta end. 1.2% below the downtrending green 10 EMA. So the Nasdaq has a lot of work to do, but like I said, this is day 2, and you can see this is classic stuff here where you see the index is selling off with heavy volume. Since the summer, all the above average volume days are down days, and then it goes up on this little light putsy stuff. So, take it for what it's worth. Yeah, we had a bounce today. We were overdue for a bounce. We got a little bounce of 146 points, or 1.16%, and it closed at 12,789. Tomorrow's the last day of the month, and you can see the Nasdaq is down 429 points this month. It's down 3.25%. So unless it has a massive rally tomorrow, we're going to have the 3rd month down in a row, which is the 2 years in a row. It did it in 2022. Hasn't done that since. I don't want to go crazy here, but 2 years in a row where it went down 3 months in a row. I think you got to go back to the the global financial crisis, 2008, 2009. These are big moves, though. I mean, you're talking about down 17% in a month. But yeah, there's 10%, 17%. Those are massive moves. And then it was down here in 2007 right here. So it's down 10%, 7% down. So that's 3 months in a row and two consecutive years. It's been down 3 months in a row, but not in 2 consecutive years. It did it last, I believe, right here was in 2015 and 2016. So that's pretty significant correction there. And I would expect at some point this thing's going to get some support. You can see it's traded down to its below its 30-week line, and those moving average are kind of converging now. But yeah, the Nasdaq, it's got a lot of work to do. We're just going to take it one day at a time. Don't want to get too deep into the weeds here. One day at a time. This is day 2 of an attempted rally. It closed at the 200, and we'll see if it can continue to rally in the coming days. So we'll take it from there. I am going to go to the individual stocks, the Magnificent Seven, of course, and you can see this is very similar to the Nasdaq, where it's had these 3 legs down, and maybe it's tired of going down, and it traded up today to its 200 SMA. Now they report earnings on November 2nd, so all bets are off here. It closed 0.2% below the 200. Here you can see there. So we'll see what they have to say on Thursday. Microsoft looking a lot better than Apple. Got a little double bottom pattern going here. As you can see, the 311 traded up to 340, then down to 309. Had a nice response to earnings, then pulled back to the 50, but the last couple of days has regained its footing in lower than average volume there. Google sold off hard with earnings. This is 3 days in a row. This is a 3-day roll. On the 4th day, the shorts shall cover, and today they did. It was up, nearly 2%, and much lighter volume. So Google looks terrible anyway. Meta looks a lot better than Google, that's for sure. Why? Well, because it traded down to 279 there, and then rallied back about 8% from that low on Thursday. The low was 279, rallied back through its up to its 50. It's right there, 0.3%. So maybe it can rally through the 50 tomorrow and have a shakeout +3 there, maybe, huh? We got the one shakeout here, the second shakeout. Maybe Meta wants to go higher, who knows? One day at a time, like I say. Amazon, this one's been consolidating. It traded down nearly to its 200, had a good response to earnings. Today tacked on nearly 4%, and it is right there against its 50 SMA right there, 0.4% above the 50. So Amazon looking a little better. The two that are not looking good are Tesla. This thing looks horrible. I know that's not a real technical term, but you can see it undercut the 200 and then kind of fake rallied up to it and then got pushed back down, and now really is sold off hard. That's an inverted hammer candle right here, here. I mean, it's closing near the lows of its days on those down days, and today it was above average daily volume. A lot of it had to do with the semiconductors. I'm going to get to this here in a minute. NVIDIA's just been trading sideways since when is this? May? Okay, May. It's just been doing this right around 400 and undercut 400 last week. Now it's above it, 411. But when you go sideways in a downtrending market, the relative strength is still hanging in there. Sideways is good in a downtrending market, but NVIDIA just has no strength. And like I mentioned over the weekend, it's got the it's definitely got the head and shoulders look here. So I'd be careful if I was long NVIDIA, which I'm not, because it just doesn't show me, it's not worthy of my time or my money. Anyway, I wanted to point out the semiconductors are weak today due to on semiconductor. Now they are connected to automobiles, and so they not only drag the semiconductor sector down, they drag down the automobiles sector, and they reported earnings of, I don't know, there was a shortfall. It wasn't this quarter's earnings. It was the forward guidance that was supposed to be 2.2 billion. It was 2.1. I mean, it was 100 million in lowered guidance, and it just caused a wrecking ball in the semiconductors and in the automobile industry. Over 100 million, because Wall Street figures if they're going to lower, that's the trend lower. The demand for automobiles is lower, and where's the trend going to stop? Nobody knows. So they just sell first and ask questions later. You can see the massive volume here, 22% move to the downside. Wow, on $100 million lower guidance. So this is the stage of the market where bad news is bad news, and it's not getting shrugged off at all. I want to take a look at some of the other semiconductors. This is an equipment stock, Applied Materials. traded down to its 200 SMA, kind of flat on the session though. AMD, they report earnings tomorrow after the close, and they're below their 200. Yeah, kind of flat on the session as well. AEHR, they're connected to the semiconductor. This one sold off 20% down to 23. Wow, that looks kind of weak, folks. That's what happens when you don't have a lot of vendors. You only have, rely on only a couple of customers. ACLS is another equipment stock which sold off with that on semiconductor, and you can see the volume here. This is just looks like it's giving it up here, way below the 200, and yeah, just a tough day for the semiconductors. I mentioned the automobile stocks. I did talk about Tesla. I'm not going to show that again, but there I go. Toyota Motors. Let me go to the Toyota. This is below its 50 now. It was down 1% today. Honda Motors. Wow, down 2.5%, and heading towards its 200. Of course, the American automakers Ford just looks like just a terrible chart, way below its 200, and just it's in a free fall, as Tom Petty would sing. And here's General Motors. Wow, okay, it was up today 14 cents, but you can see the trend here. Trend is lower, maybe just some shorts covering there. But yeah, the automakers look pretty tough, and demand is waning. Prices are high, and the consumers are just backing off on buying new cars, rather buy used cars or fix up their old ones. Okay, anyway, I want to go to the retail stocks. Yes, Deckers followed through with their after their outstanding earnings report on Thursday. It had a massive day on Friday, and or it might have been Friday morning they reported. Doesn't matter. They ramped 19% today, up another 1.5%. So Deckers Outdoors following through. That looks good, breaking out of the consolidation there. You don't see much of that these days. Abercrombie and Fitch, they've had 2 earnings gaps higher, maintaining its trend here as it finds support at the 21 EMA. American Eagle Outfitters is another retailer trading above its 21. If I go to the weekly chart here, you can see the cup with handle followed by a cup pattern. Very strong stock for this particular tape. I wanted to get to McDonald's in the retail space because McDonald's is definitely a blue chip stock and has been. I could just go to the monthly chart and just see it went from what $12 COVID low or whatever, not COVID, $12 .com low up to 260. This has just been a massive winner in the last 20 years. And you think a stock like that, well, it can't have any more life left in it, but they just keep grinding higher. They have higher prices, new menu items, and McDonald's had a nice report, and it rallied nearly 2% today. So congrats to the longs. They pay a 3% dividend. They pay you to hold it. Lululemon still looks good to me. I know a lot of people say, "Oh, is it it's up here at 419, now it's at 391. This thing sucks," but it's just forming this little pennant pattern here, which I kind of like, and let it go sideways there at 390. We'll see if it can do that and put it on our ready watch list here. To me, Lulu looks pretty good. They don't report earnings till December 7th. Okay, I'm going to move on to the oil stocks. They got sold off today, thank goodness. They have been really strong, though. This is TNK. I think it made a new high today, then pulled back. Still, it's well above its 10 EMA here, so it does need to pull back 5% above its 10 EMA. That is a strong stock in this market. FRO, another one that little extended, pulled back today. It's 2.6% above its 10. INSW International. Seaways, another one, just made a high today and then pulled back. So yeah, and it's still, even though it pulled back 2%, it's still 2.3% above the 10. So you got to be patient with those. They're not real high flyer stocks. I guess I got to go to Tidewater and Weatherford. Yeah, Tidewater back to the 50 today, which is okay in this tape, trading sideways. Same with Weatherford. That's fine. I got to go to the drug stocks. I took them off my leading stock list, even though I know they're leading stocks. This is Eli Lilly. And you can see it just closed a tick below its 50. I took it off because it closed below it on Friday, but to me, they're going to report earnings on the 2nd. You know they're going to be good. I just want to see the response to their earnings and their forward guidance. In this market, like I said, bad news is bad news. I want to see how they react to some good news, because I'm sure these two are going to report good news. Novo Nordisk, they issued forward guidance. You can't even see the stock here today. It just gapped higher and stayed higher. It was just a tight little daily range there, and it closed at 32% of its daily range. Sold off 3 days below the 50, then rallied back above. Wouldn't be surprised to see this thing ramp above 100, but we'll see. Take it one day at a time. Once again, reporting earnings on November 2nd. That's all I have for today. No, I'm sorry. I've got the education stocks, which are just ramping. EDU. I just have to show this because these stocks are getting some love. I'm not interested in them, but those are kind of like the insurance stock. They're catching fire now, just so that people can short them and bring them down a little bit later. That's Stride, which gapped higher. This is ATGE, which gapped higher last week and added to its gains today, nearly 3%, and then PRDO. So this entire consumer services education sector is just ramping higher and showing strength. We'll see how long that lasts. That is a nice trend, though. Like I said, that's it for me today, except for I have one more thing in the honor of the great Steve Jobs. I've got to go to a little bit of a pen action after hours here. Arista Networks reported. Now, it got sold off with the Facebook or Meta Platforms earnings report last week, when they said they were going to cut CapEx spending just ever so slightly, and this thing really got sold off hard. Like I say, bad news is really bad news. Yeah, 9% move lower on somebody else's earnings report. They reported earnings tonight, beat, nice quarter, and it's up nearly 6% after hours. So that should bode well for that stock tomorrow. Pinterest, they beat on all metrics and added some monthly average users, which is good, for the eyeballs for going forward. And it's up more than 12% after hours. So that looks good as well. Wolf, I don't know, this earnings report was kind of mixed bag, but it's up 10%. So we'll see what happens with that one tomorrow. And then Monolithic, this one was up, almost 8% after hours on their earnings report. So that's the good side of it. Lattice is down quite a bit, 15%. And you can take these earnings reports two ways. Like, it's showing weakness. It could mean that the industry is slowing down, or somebody's taking market share from them. And this is a fabulous stock. I don't know. Maybe another company's taking market share. Maybe the semiconductors are weakening. I kind of would believe that they're losing market share. RMBS is another one of these fabulous stocks. It's oh wow, it reversed. Nice. It reversed 3%. It was down quite a bit after hours. So maybe they said something on their conference call. I have to dig into it. I'll be back tomorrow morning. Thank you for watching at MC Stock Charts. We never give up.